Hey guys, welcome back. Over the last couple of days, we've talked about mortgage relief and mortgage forbearance, but we haven't discussed how that might affect your credit going forward. So today's video, that's what we're going to touch on so that you have a little bit of knowledge if you're having a conversation with your lender about doing forbearance, you know the right questions to ask. And if you're considering it going forward, you know whether or not it might be worth it to even consider doing a forbearance at this time. But before we get into that, I'm Jeb Smith, Coldwell Banker Realty here in Southern California, and I appreciate you taking the time to watch. A lot of you have joined me over the last week or so, and I appreciate that support very, very much. For those of you who are new to my channel, new to this video, do me a favor. If you're interested in real estate at all, mortgages at all, how this might affect you with regards to COVID-19. That's what my channel is all about at the moment. You know, it's all about real estate, but I'm really just trying to stay on the trending topics to help guide you through that process if it's affecting you in your life whatsoever, so that you have the knowledge and you're able to make, you know, good decisions moving forward. So I appreciate you taking the time to watch, and if you like the video, hit the subscribe button. I would greatly appreciate it. So let's talk about, traditionally speaking, how credit is, you know, how the creditors update your credit. And then we'll talk about what we know so far about mortgage forbearance. So typically what happens is when you make a payment to a creditor, whether it be a student loan, a car payment, mortgage, what have you, those creditors report how you pay your bills to the credit bureau. So there's 3 different credit bureaus. They send that off to the credit bureaus, and the credit bureaus update your score, you know, every month, if you will, based on that data. Well, typically what happens is as long as you make your payment within 30 days, the creditor assumes that you've paid your bills on time. That's what your credit report reflects. So even if you pay your bill late, so say for example your mortgage payment is due on the 15th of each month, and you pay, or the 1st of each month rather, and you pay it on the 15th, that's 15 days late, but at the end of the day it doesn't affect your credit in a negative way. In fact, you can go up to 29 days and it doesn't affect your credit in a negative way. But once you go 30 days or more, that creditor then reports to the credit bureaus that you've essentially had a 30-day late. And if it continues to happen, it might be a 60-day or a 90-day or a rolling or what have you. So that's typically what happens with regards to credit. Now, what has been said so far with regards to mortgage forbearance is that it's not going to negatively impact your credit. That's what everybody's saying. But keep in mind, these creditors can't score someone who is making their bills on time as normal the same exact way they would for someone who has gone into forbearance, right? I mean, it just doesn't make sense. So if I pay my bills on time every single month, and you've gone into forbearance for 6 months, there's got to be some differential in the credit score, right? And so what happens is, while they are not going to report you late, they are going to, more or less, what they should be doing is adding a disaster code to your credit. So that disaster code reflects something has happened in the area, and traditionally these are used for areas like, you know, that have hurricanes or, you know, major earthquakes, or something big happens in an area. You know, that when those creditors report, if you live in one of those areas, they would issue a disaster code to the creditors to show that, hey, look, this guy was late, but he's in one of these areas, so it shouldn't really be considered a late. And so that's what I'm being told should happen going forward. But you've got to make sure, as a consumer, and talking to your mortgage company, how they're going to score this, right? I've heard people say, hey, look, they're telling me that they're not going to impact my credit negatively. That's great, but how are they going to report it to the credit bureaus? That's what you need to find out. Are they going to use a disaster code? If they are, great, get something in writing, because you want to make sure that if you do have to go through forbearance, that it's going to impact you the least amount possible with regards to your credit. Now, I get it. If you're out of a job, you can't make your payments, and forbearance is absolutely what you have to do. you may not even care about your credit, and that's okay. But what I'm telling you is that if there's an opportunity for you to save your credit, try and do that, because there's a lot of people out there, there's a lot of conversations, a lot of people commenting on my videos right now asking, hey, look, I really want to refinance, but I think rates are going to go lower. Should I do it now or should I wait? But what happens if I do a forbearance? Am I able to refinance? And that's one of those things that we honestly don't know at the moment. We don't know, as real estate agents, even lenders really, how the mortgage companies are going to look at somebody that did the mortgage forbearance over this period of time. Are they going to say, hey, look, you had a 90-day late because you didn't make your 3 payments, or 60 days or 180 days or whatever it is? How are they going to look at that in 6 months? Is it just going to be normal? It may be, because it's impacting everybody really globally. So they may look at it as, hey, look, this guy was really affected. That there shouldn't really be any change in his credit. We're going to allow him to refinance. They may do that, but they may not, right? And so you have to come from the side at this point that the lender is going to look negatively upon it if it affects your credit score, if your credit score is lower in any way. So the reason I'm bringing up these disaster codes is so that you can have that conversation with the lender when you call, to ask them, hey, how are you guys going to report this to the credit bureaus? Are you going to use a disaster code? If so, great. Can I get it in writing, right? Because you're having that conversation up front. And this all starts with having that conversation with your bank, right? You want to call, you want to talk to someone so that you can get these questions answered. Now, some of the websites out there are really in depth at the moment. You can apply online and get the answer for your mortgage forbearance, and there's a list of questions and you can go through all of them, and really, like, a lot of these guys are super detailed now in the questions that they have on their website, because they've received so many of these questions at this point that they've now put out a really good list of question and answer. So a lot of these answers you can get, but each lender's not the same, right? If your loan is FHA, or maybe it's Fannie Mae, maybe it's neither. Maybe you have a higher balance loan and it doesn't fall under either of those. How are those guys going to report it? That's what you need to find out, because unfortunately, all the information I have is what's being provided out there, right? I don't have any insight that the people out there putting the information have at the moment. So I'm only going off what I read. That's what I'm providing to you guys. I'm just trying to do a synopsis of it to help guide you through that process, so you don't have to read all of these different documents or go to these different lenders to find out. So what I would suggest is calling your lender, finding out how it's going to affect you. Maybe have that conversation. Hey, look, if I do this and I decide to refinance in 60 days, 90 days because I got my job back, is this going to affect me? Maybe they don't know the answer, but maybe they do. And that's a conversation to help guide you so that you can make informed decisions going forward. And ultimately, I mean, this is about, putting you in a position where you can eat, you can pay your bills. It doesn't affect you. You're trying to make it affect you the least amount possible. So what I would tell you is that if you're in a position to pay your bills, right? I mean, that way it's not going to affect you. There's a lot of people out there trying to play a game where, hey, look, if they're going to give me 6 months, I'm just going to take it. I've got the money, but I'm going to take it because, I'd rather not pay them. Well, at the end of the day, you're going to have to pay. So, and I would tell you, if you want it to impact you the least amount possible through this transaction, or through this epidemic, if you will, go about paying your bills on time, and then you won't have to even worry about this. But if you do, make sure you're having the conversation and asking those questions. So, as always, I want to hear your comments. What has your lender said about effects to your credit? What additional questions do you have about this? Comment below. I'm addressing every single question the best that I can and as quickly as I can, and I want to do that for you as well. And as always, I appreciate you taking the time to watch. Thanks for joining me, and we'll talk again soon. Have an awesome day. Bye-bye.